now over 3 years since I first started warning that there is something seriously going wrong at Tesco, Britain's supermarket giant, and that stock investors should take a note and sell out at what was then a stock price trading near its all-time high of £3.83. At the time I was criticised for basing my views purely on anecdotal evidence. However, as experienced investors know, that to truly understand how a company is performing, one has to experience its service and products firsthand as a consumer. And so in a series of articles starting October 2013 and spanning more than a year, I warned that Tesco was seriously lacking when it came to customer service, in that its demoralised and underpaid staff were going out of their way to put shoppers off from capitalising on their various offers, such as spend £40 and get a £5 off your next £40 shop voucher. In fact, several months before my first Tesco article, I actually wrote to Tesco management warning the supermarket giant looked set to face a crisis as poor real customer experience meant they were going to hemorrhage big spending customers. But all I got back was a bland reply that failed to pick up on any of the points I made that would prove to be harbingers of what was to follow. And so the Tesco share price entered what could best be described as a death spiral, and despite hitting bottom at £1.37 has since underperformed the FTSE, as revelations of just how badly the supermarket giant has been run went from bad to worse, from its debt black hole to outright accounting fraud. So now in this series of videos I will attempt to evaluate if Tesco has finally turned the corner or not. So Tesco has managed to dodge a bullet and avoid a criminal prosecution by agreeing to pay a fine of £129 million as part of a Deferred Prosecution Agreement with the Serious Fraud Office for its 2014 false accounting scandal, as well as compensate investors by an estimated £90 million, including interest, for those who bought Tesco shares on the basis of false accounting in 2014. Thus, Tesco just took a hit of approximately £220 million, which is about half what it could have been, with some estimates ranging as high as £500 million. Clearly, the SFO took Tesco's distressed state into consideration, as the supermarket giant has been in meltdown, stock price having collapsed by 60% from its high and having lost £10 billion in annual revenues to its competitors, and its post-tax profits of 2016 coming in at just £129 million. Yes, that's right, the SFO fined Tesco the whole of its profits for 2016. Now the big question mark is, are Tesco's management as naive as they were stupid to have thought they could have gotten away with fraud? When police agencies spend millions of pounds investigating an organisation as large as Tesco, peeling away layer after layer of the Tesco onion, then whilst the accounting fraud may have been settled, however the police may not be quite done with Tesco just yet. So police resources having been committed to investigating Tesco, which involves covert surveillance, perhaps the police even using their favourite of all tools to hurry investigations along, i.e. entrapment, which means Tesco management and staff would be very naive to imagine that the police are done with Tesco. So we may be hearing new bad news headlines of police investigations in the future, whilst in the meantime the police continues with their evidence gathering and entrapment that could extend far beyond the original fraud investigation, from head office to the regionals right down to individual stores. So if I was a Tesco worker, I would be careful of not falling for police entrapment. As for Tesco customers, well, who knows how far this could go. Perhaps customers should be on the lookout for anomalous behaviour, such as persons squatting for extended periods of time in virtually every other aisle. And where shopping at Tesco is concerned, well, Tesco has repeatedly demonstrated that Tesco just cannot be trusted. From the BBC's recent investigation into fake shelf prices that failed to convert at checkouts, to now the £220 million bill that customers will have to pick up in higher prices. So no, I don't shop at Tesco's anymore, and I used to be a regular £200 per trip shopper. Though there could be a silver lining for Tesco and other British retailers, which is that when Brexit negotiations inevitably break down in acrimony, then Britain shoppers could start to realise that the Aldi and Lidl discounters are German companies. So be encouraged to shop at British stores instead. The Tesco share price trading at £1.85 at less than 50% of its 2013 high. That's a 50% loss of stock market value over the past 4 years, valuing the supermarket giant today at approximately £15 billion. And despite the fine and investor compensation coming in much lower than expected, nevertheless the shares still fail to even bounce on a short-term basis. So do see my recent video for Tesco stock prices long-term prospects.